Welcome to Citigold's series on all things investing. On this episode of Demystifying Wealth, we're covering index funds. Index funds are a type of mutual fund that replicates the return of an index. An index fund consists of stocks from a variety of companies whose stock prices reflect the value of the index. For example, Fortune 500 companies, emerging markets, or real estate. Indices are often used as broad indicators of how a select set of companies, or a market, or a sector is performing that the index is representing. You're probably familiar with some popular indices already. In the US, the most common indexes are the S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite. Every day, each of these are valued by the underlying company's stock prices, weighted on the number of shares that are floated, and that is called the index. It's important to note that index funds are subject to a tracking error, which is a difference in the return of the benchmark and the product. Tracking errors occur due to a few reasons. If the index contents change and the fund manager takes time to adjust the index fund portfolio, tracking errors may arise. The presence of transaction costs and fund expenses can result in different returns of the benchmark and the fund. To invest in index funds wisely, always pay attention to the tracking error rate. You can always choose a product with a low tracking error. Just be sure to check the fact sheet of an index fund. Index funds are a great way to dip your toes into the world of investing. They're low-cost investments that are open-ended, meaning you can invest and redeem them at any time. Plus, they're passive funds, which means as an investor, you are not relying on decisions being taken by the fund manager on the underlying portfolio allocation. Rather, it simply mirrors the index. The philosophy is that no fund manager can successfully do portfolio allocation to beat the general market over a long term. Instead, participate in the returns offered by general market without opportunistically reshuffling or relocating the underlying portfolio. Index funds are an interesting investment option for someone new to investing that wants to diversify their portfolio. However, as always, assess the amount of risk you're willing to take before you invest in any mutual fund. We at Citi simplify investing so you can get started early. Take the first step, talk to your relationship manager today.